Hello and welcome to the weekly wrap. So in terms of actual news flow itself, this week hasn't actually been the busiest of weeks. However, there has been quite a lot of substantial price action across the marketplace. So one of the key sources of focus and price action this week has of course been the US dollar, which has continued to soar ever since that NFP report we did see last week, which once again reveals another stellar month of job gains for the US. This has subsequently weighed on its major counterparts, yet more multi-year lows for euro-dollar, with analysts at Goldman Sachs now seeing parity for euro-dollar in the next 6 months. And similarly, we have also seen yet more multi-year lows for cable after breaking below that 150 handle. So just in terms of some of the catalysts for this has very much been as a result of policy divergence between the UK, US and the ECB. So just sign off with the ECB then, so this week we did of course see the commencement of the ECB's bond buying programme, which did also dictate quite a lot of the early price action seen across fixed income markets this week, with particular focus on the long end of the German curve, which did continue to flatten given the benefits of the ECB QE programme, which had also filtered around Europe, yet more record low yields across the Eurozone in the core and in the periphery. But just in terms of a UK perspective, we have also seen some comments from BOE's Carney, which have been actually more dovish than some of the recent more hawkish rhetoric, warning of the potential ramifications of the stronger pound, which UK press have actually spun a little bit to an extent, suggesting that the pound could actually lead the BOE to delay their rate hike cycle. However, so one thing to bear in mind is we have the release of the BOE minutes next week, so this could be a key source of focus, although we did actually see earlier in the week a report in CTM suggest that BOE's will could actually revert back to the hike camp, so that could be definitely one to watch next week. So then just from a US perspective for the FOMC, of course we do have that FOMC meeting next week. So we did see the US retail sales report this week, which were pretty disappointing. It did see a slight adjustment in participants' expectations for Fed rate liftoff. However, ultimately, participants are still very much focusing on the statement for next week, with participants expecting to see a removal of that patient word, which is an expectation which has been triggered since Yellen's semi-annual testimony, where she did say that the Fed do want to be more flexible so they can act quicker when it does come to lift-off rates. So definitely very much a key one to watch there, particularly in the backdrop of the strong US labour market. But then elsewhere, just to wrap off, for Greece, it's been a particularly quiet one, so we did see them confirm they are to repay their IMF loan today, but negotiations still very much at loggerheads. There's still quite a bit of ground to make up between the Eurogroup and Greece, so this could very much be a key one to watch here. But like I said, it hasn't been the busiest week in terms of news flow, so that's all from me, and I hope everyone has a fantastic weekend.